Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And today I have another amazing guest, and I forgot to grab his title. His name is Nikolay Filichkin. He is with Compute Labs. I think he's the founder. He'll clarify that. Nikolay, welcome to the show.
Jamil, thank you so much for having me. I'm really excited to be here. Yes, I am a co-founder and I am a chief business officer. And what that means is I just focus on business, revenue, a lot of Web2 stuff, just making sure that our business is, making some kind of revenue.
Very, that's important. So that's great. So I'll ask you first, what is your background and is a logical background for what you're doing now?
Oh, I love that end to that question. So that's actually the first time that someone's asked me if my background makes sense for what I'm doing? That's a great question. But to start, my background is I am originally a Ukrainian immigrant. I immigrated quite young from Ukraine to the United States, but that's really back. My education is I have a double major in business law and marketing, but I actually spent 6 years of my career in video games. I started at a video game fintech company called Xsolla. I started the company as an entry-level sales, and then I worked my way up to a director role where I led a team and started a whole department in strategic partnerships and corporate development. I had a really good time there. I helped the company grow from 200 people to 1,200 people. I've done a ton of enterprise sales and project management. There was just so much to do at a company that goes from like small, medium to a medium-sized enterprise business worth over billions of dollars. Really good time. But I spent 6 years there, which means, I got a little bit tired and I needed a new opportunity. And fortunately, at the time, one of my former colleagues, who is now my colleague again, said, "Hey, I'm doing this thing with compute, and we need to shake up the world. We need to offer something that is tokenized for GPU. Would you join me?" And I said, "Fuck yeah, I needed something else to do, so let's do it." And here I am now.
I like that. Fuck yeah, I did it. I think that's the best motto I heard all year. So awesome.
Mhm.
So
Oh, to answer your question about
yeah,
does it make sense? Is there a logical transition? I don't know. In one sense, yes, because I've always done some level of partnership management. That's always been like my thing. And I'm still doing that today. So in that sense, yes. In terms of industry from GPU, yes, in a sense, because video games use GPU quite heavily. In a sense of data centers, no, that's a completely new space for me. But in a sense of finance, because what we're doing is really enabling financial investments into GPUs, that is new. That is not a logical transition, except for the fact that I'm a heavy, very boring, old kind of investor. I do invest a little bit in crypto, but primarily my investments are super boring, like S&P 500.
boring is better when it comes to finance. A lot of people don't think that they wouldn't agree with me, but I'm like boring. Boring is actually really good.
Yeah.
So, um, but I want to talk about something exciting today. I want to talk about Compute Labs. Right. So, what's Compute Labs all about, and how are you transforming GPUs into financial assets?
Yes. So that is the sole reason we're here and the sole reason I have a job. And at Compute Labs, what we're doing is, to your point, turning these GPUs into financial assets. We're turning them into securities, basically structured products under Regulation D for accredited investors to start. Effectively, what we do is on one side, we talk to data centers that need more compute capacity. They have a ton of demand. They have a ton of customers that are just queuing up to use these GPUs, but they don't have the capital to actually scale and grow their businesses. So they need alternative financial um, allocation to actually build and serve more customers. They need more GPU. So they come to us and say, "Hey, can you allocate some capital?" We're like, "Absolutely. Let's go ahead and support you guys so you can grow your business." Then we go to investors and we say, hey, investor, here's a really cool opportunity to own a GPU, to own the rights, the profits, the proceeds, along with the liquidation rights for the GPU, and you'll get like a monthly cash flow on it. That's your investment. So that is how we bring capital to the data centers.
Got it. And the types of structured products you're creating look like what?
They are Reg D offerings. And so let me stop there for a second. There are Reg D offerings where we take the GPU, we put it on a SPV or a special purposes vehicle, like a small little entity. But what we're actually doing is we are tokenizing the GPU so that what the investor is receiving is the investment vehicle that they receive is a GPU NFT, which once they plug in that GPU NFT into our portal, into our dashboard, they then get to collect all the proceeds, all the profits that they're collecting on a monthly basis in USDC.
Got it. See, I when I hear that we're creating structured products in blockchain, I think back to my days at AIG, and I'm
Hmm.
like, they did some things wrong in Wilton, that caused all the problems, right? So, what lessons do you think that your company has learned in the Reg D process that you're applying that are going to make investments are a little safer for the customers?
Yeah, I mean, that's a really good question. So, as a security, there's a high threshold to follow for the United States. We have to make sure that investors are, of course, in the first place, just accredited and are educated on their investment. So, on one part, there's just a high barrier of who can we even talk to about this kind of topic in the first place. But beyond that, we have some SLAs in progress with some of our data centers, making sure that they either have a minimum uptime or a minimum optimization rate or utilization rate rather on the compute. So making sure that they're constantly being used and that there's a revenue being taken place. Other ways of doing that is through insurances, warranties, things like that.
Got it. Got it. Interesting stuff. So I'm asking my next question might have been answered already, but I don't know. But you might be able to shed some light on it. You are content, and I looked at it from a blog on your site. I think you are looking to shake up the RWA tokenization world. How are you shaking it up? Why does it need to be shaken up? What is your vision on that?
Yeah, I like that question because I think that the RWA space needs more. How do I put it? It needs more scale. It needs more volume, and it needs more credibility in a sense that um, I think there's a lot of really incredible RWA projects out there, um, but I don't believe that RWAs are mainstream, and maybe that's just because Web3 is still not mainstream. That could be it, but I think there's opportunity for us to turn a really hot topic, get everybody interested into it, and then just get a lot of attention on RWAs. Because when we speak to investors, we ask them to obviously purchase a GPU as an investment, but we are asking them to purchase an RWA. And maybe with all the attention and marketing that we are putting onto investors, when we bring them here, they'll then also go to an adjacent project and say, hey, um, now that I'm into GPU NFTs, maybe I'll go into like a solar NFT or I don't know, a hypothetical nuclear NFT. I think that by bringing the attention to one good project will scale the rest, and it's growing the market as a collective, really.
Got it. Now I'm confused. You said RWAs aren't mainstream. When I think of RWAs, I think stock, I think equity, definitely oil, definitely mainstream, right? But when I hear the word Nvidia, I
Yeah,
think I think of something obscure, right?
that's a
You're
fair point.
you're creating GPUs that
Yeah.
are gonna that are assets that are physical products, right? NFTs. isn't it more mainstream than the Nvidias of the world that are obscure?
I like that challenge. And perhaps it's just because that I am so heads down and I'm only speaking to my target audience. I'm only speaking to the people who are engaged and are curious about compute, the growth of AI, and this emerging market. Me personally, when I speak to my market, they're all interested in GPUs and compute and understanding how to actually get their feet wet with growing this through this investment. It's seldom that I speak to investors that are actually going through traditional equities and ETFs via RWA. Most investors whom I've spoken to, and that's just me, my personal take, uh, when they go into traditional equities, they're gonna go through their brokerage. That's how I've seen it.
True. I don't buy equities. My wife works on Wall Street, and I'm not allowed. But I don't want to buy them. I don't want to buy them anyway. I want to buy crypto. So you
Fair
know,
enough.
um, so I want to find out, then what the future of compute looks like to you.
Yeah, it's a question that the Compute Labs teams discusses, I think, fairly often. Actually, just this morning we were thinking about, well, how do we think about downside potential and of some of these deals that we're offering? And it often comes up like, what if we experience AGI or AI is autonomous and I wouldn't say consciousness, but self-governing. And we're thinking like, would that increase demand for compute? On one side, yes, our CEO was just saying it would certainly increase compute requirements for inferencing, but there will no longer be any necessity for training. If we experience a like some kind of God effect as AGI, then there's no necessity for training, which means that that type of demand will decrease. That type of compute product or compute chip will no longer be necessary for data centers. But inferencing will be then replaced, and inferencing compute will become even more demanding. So that's just one conversation we've had. But I also see that there's just more and more demand for compute every single day. We get data center just approaching us left and right saying like, hey, we have customers, we need more capital. And that's what we hope to help them with.
You said the magic words that everybody's scared of. You said self-governing AI,
Yeah.
right? That me, that sounds like Armageddon. you know,
I could see that.
what do you do in case of Armageddon? Would we will need more compute, or
You know, that's a really interesting question. It's like, do we fight fire with fire? I don't know. Man, just let's just turn some switches off. I don't know. I have no idea what to tell you. I anticipate that maybe quantum computing would then come in place and be more of a security layer or to a threat of AGI. I have no idea. I don't even know if AGI is a threat. But I know we're afraid of it. I'm not sure. I really don't know.
yeah, that's a good. That's the question that people should explore. Like, should we be afraid of AI? You know, we shouldn't, right? I mean, finance. I mean, finance is meeting tech in this AI revolution. How do you see that? How do you see it playing out long term, where finance meets tech in this revolution?
Yeah, I think that's a great question. And the way I think about it is that in the last 20, 30 years, and honestly even beyond that, technology has been this growing industry where if we see the top of the global market, technology is the leading growing industry where most of the businesses you'll see on the S&P 500 are going to be technology based and that's well understood and so much of that has come from investments into tech. So that's just to demonstrate that hey, technology needs finance in the first place. There needs to be good capital, good investments, uh, getting into more and more technology so that we as a global population can prosper and we'll have new cool things. We have ChatGPT, now we have Gemini, and now we'll have like even cooler products because of these investments going into tech. I see it only increasing. And that's why at Compute Labs we want to facilitate the investments into compute-based products and into GPUs and helping these AI companies grow their businesses, grow their products, give them additional compute capacity so that we just have overall more cooler things to look forward to.
Sounds good. That sounds interesting. So, um, I want to talk about greater participation across all sectors. So, how can we get that greater participation across all sectors in a multi-chain AI empowered world?
Yeah, I think that's a brilliant question. And I also just like kind of summarize that as how do we just get more people talking about this? How do we get more usability or how do we get more volume into this market? And I think my answer is pretty consistent. If you asked me this question 3 years ago, I think I would answer the same way. For me, it's just user experience. I think there's value. Uh, I think there are so many projects in Web3 that are just so valuable. But the fundamental issue that bridges value and obtaining customers or obtaining uh, interest from the market is just the ability to use it. And that is a user experience issue because if there is a really good product out there, but it's just really clunky and it's a pain in the ass to actually like go through it, it's not gonna really bring volumes or it's not gonna bring attention. We're such fickle people with our attention. Like I have Instagram Reels giving me some new dopamine rush like every 10 seconds. Like I just want to do things quick. And for me, that all comes down to having a better user experience.
So people tell me the user experience innovation right now in Web3 is agentic AI.
Fascinating. I could see that. I could see that. Yeah, yeah. Assuming that agentic AI is taught well enough to go through some clunky processes and do on your behalf, I can see that. Uh, now, can agentic AI go through all that? Probably yes. They need some good documentation, but probably yes.
So we have so it can. Let's assume it can. It might be able to. Let's assume it can. So you have that. You have compute products you're making. So does will AI replace the traditional finance system and create a new financial system based on all the compute, based on AI, based on all this innovation together?
An interesting question. I do not see that happening. Similarly, because I think investors, there's like these varying degrees of education for each investor. And for new investors, I think that is the right solution, some kind of agentic financial solution. Yes. But right there, I think about robo-advisors. And robo-advisors are incredible products, especially for someone who's new to investing. I think of that as an agentic financial solution, really. And their point of volume and getting more users is just about fees, education, making things easy. But I think at some point when you're an investor and you kind of already know what you're doing, you know what kind of um, safety or security you like in your investments or return profile, you're just going to do it yourself. I invest myself in my own brokerage. Again, I'm a boring investor, but that's besides the point. And I actually prefer just investing into like an S&P 500 over a robo advisor. Robo advisors are cool, but I just have my own workflow.
So I want to touch back on a crypto topic that's pretty much older. That's kind of boring now. People thought didn't have any value in NFTs, right? you're doing something you really unique with NFTs is you're doing, you're creating financial products with NFTs. So, which are, it's more than just a JPEG, you know? So, so what's the future, untapped future of, of NFTs, and how do you see that playing out in your area?
Yeah, it's a really good question as well. So a lot of respect to the JPEGs. I love me some good NFTs with some really sick art because art is beautiful and we need more of it. We need more expression. That being said, I see a lot of fundamental value in NFTs that are related to finance. There's also, of course, some NFTs coming from gaming, but I just don't believe NFTs belong in gaming. That's my personal hot take coming from the gaming industry. Uh, but I see a lot of value in NFTs for finance because I think Web3 is, in general, things are on blockchain. By being on blockchain, they're naturally on a ledger, and when you're on a ledger, then you have financial transactions, you have credits, you have debts, and I think all of that is really well put together for NFTs because it'll consolidate all the information. It'll have the transactions. It'll be public. It'll all be on chain. I think that's where NFTs should be going, just focusing on building a financial world.
I like that. There's only one thing about what you said that you're going to find disagreement with. And you think you know what it is. It's NFTs don't belong in gaming.
That's my
Yeah,
personal hot take.
you know, I would ask you why. So
Yeah, I I can definitely. So if I'm gonna put on my gaming hat, um, I think that NFTs do not make sense for publishers, but they do make sense for the gamer and the consumer, assuming there's a good user experience. I love the idea of taking a, let's say I have a skin of a Mario costume from one Nintendo game to my Ubisoft game to my um, Epic Games game. As a consumer, as a player, bro, that is awesome. Fuck yeah. Like I want to be able to take whatever I own from one game to another. In reality, how will that actually work? You need one publisher to first ingest that NFT, ingest the metadata on it. Now, does that metadata have all the right information? Like if it's just like if there's any attributes to it, then like, oh, does it have +6 strength, +7 dexterity, things like that? That doesn't translate well from one game to another game. That's one issue because now you need someone to actually be able to interpret for this game that, hey, this is a racing game. I'm going to interpret this NFT for this way. And then for this shooting FPS game, I'm going to interpret this metadata in this way. It's really difficult to do. You can do it. You can't do that at scale. You can only do that on a one-to-one basis, which I don't believe a lot of developers will have time with because they're so focused on actually shipping. The next piece is then about the commercials. Why the hell, as a publisher, would I be willing to bring uh, someone else's skin from game one? Like, if I am Epic Games, why would I want someone to bring their skin from Call of Duty or from Assassin's Creed when I want them to buy my skins? I want them to purchase my products, not someone else's. So then you need commercial agreement between these developers and making sure that everything's on chain. Okay, if I'm a player, am I going to pay 50 cents to now use that same skin on a different game? That doesn't make sense. Now, there could be developers and publishers can do it for their own benefit because like, hey, I think, oh, this will bring attention. I think this will bring traffic. But they're already so focused on making sure that the game is actually working and that people are not complaining about it. And there's more issues with debugging a game before it's released. Um, but I can talk on and on about this. I don't, let me know if you have further questions there.
well, what you said makes sense. But you're saying those challenges don't exist in the traditional finance world.
Correct. I'm not going to complain about my attributes from uh, one financial investment going to that custodian. It's the same product.
That makes sense. Yeah. I'm interested to see how this all plays out. I am interested in your roadmap. What things look like for you going forward in the medium and long term. What do you think?
Yeah, yeah, that's a great question. So our roadmap is mostly just putting out more compute opportunities to investors. And then beyond that, beyond giving more opportunities to investors, we also have some really cool technology development within our dashboard, within our chain. So GPUs are fractionalized, meaning that, so for example, like a H200 GPU, this is a very heavy GPU. It costs $30,000 for one unit. Uh, you need 8 of those units to build one server. So at minimum, we're looking at a $240,000. But then you need more things like RAM and chassis and CPU. So it's more like 270 or something like that. But that's besides the point. Then you need multiple of those servers to have like a decent AI workload. So you're not really getting a good workload until you have like, I don't know, $5 million worth of CapEx or capital expense. Um, so what we really like about what we're building is that you can fractionalize your ownership of these GPUs. So instead of having to spend $30,000 for one unit, you can spend a couple $100 and you own a piece of a GPU. You'll own the rights, the profits, you'll get a yield, a monthly cash flow, that kind of thing. So actually that's already built. We're releasing it now. Um, and yeah, we're just more excited about building more functionality for our investors.
And it sounds like a great strategic opportunity and a real world asset to me.
Yeah, I agree.
So awesome, awesome. So I want to thank you very much for speaking with me today. I enjoyed this conversation. I have one last question. Um, it's how can people find out more information about you, about Compute Labs? How can they, you know, get a compute lab, NFT for their own investment? How can they do that?
I appreciate that question. Yeah. So first off, please visit our website, computelabs.ai. Beyond that, we are on X, we are on LinkedIn. You can always reach out to my email. My email is nick@computelabs.ai. And we're always happy to continue the conversation. Also, we have a Discord as well, so that's a thing.
Awesome. Thank you very much for your time today.
Thank you, Jimmy. I appreciate it.